Hello, everyone, and welcome to the Wall Street Blockchain Alliance Crypto Roundup for Friday, July 28th, 2023. I'm Josh Klayman, here with my co-hosts David Brill and Ron Quaranta. Before we begin, a little disclaimer. Please keep in mind that nothing discussed in this broadcast should be considered legal, investment, tax, or any other kind of advice. And the views expressed here today are personal views only, and they don't necessarily reflect the views of our respective firms. So welcome, Ron. Welcome, David.
Hey, Josh. Good to see you. David, good to see you, buddy.
Hello from balmy Florida. It's raining again.
It's pretty balmy in the home office of Central Jersey as well. So
that's great. Well, today we've got a lot to cover, guys. So I think one of the first things, if you want to kick it off with, we can talk about ongoing ripples from Ripple.
Almost painful, Josh.
I'll
dive in on the Ripple stuff. Just as a non-legal person, I'm struck the ongoing conversation: will they or will they not appeal? And really, I reread Judge Torres's rendering in that case, and I was really stunned at what I thought was a very nuanced and much more in-depth analysis than I think a lot of people took it for. Right? There was this kind of ongoing, well, it's protecting institutional investors, but it's harming retail investors. I think it's a much more nuanced conversation. And when I hear this, the other side of that is, will the SEC appeal? I just, in my own mind, can't imagine a world in which they don't appeal. And again, I look at that from a business and a markets perspective, being a non-attorney. But David, Josh, did you see the same thing?
So, I expect them to appeal. And I guess the question is, where do they appeal? And so I think what's interesting is Judge Torres cited other precedent in the Second Circuit. She cited the judge's opinion in Telegram. So I think that a straight appeal of her ruling right up to the Second Circuit could be challenging because she cited other precedent. And, it's not clear that the SEC has the more compelling arguments. And the idea that they might appeal in the Do Kwon case, which is also another Second Circuit case, it would be district court appeal, could be interesting to them because depending on how deep Do Kwon's defense going to be, maybe the same amicus filings don't occur, or maybe the community just has to get everybody rallied together again. So look, I think tactically speaking, it makes sense for them to take several shots at the apple if they don't agree with the ruling. I just think that for people in the community, I think we would rather see more focus on rulemaking or creating an environment that tokens can move forward rather than appealing these decisions.
Yeah, I think in that Terraform Labs case, the filing, also in the Second Circuit, where there's a very different judge, as I understand, quite different temperament from those who've encountered both judges. And that something in the filing by the SEC had suggested or had said explicitly something to the effect of an allegation that the Ripple decision was wrong. And so some believe that Chairman Gensler's SEC, right, could launch an appeal, and it could take years to find out whether it's actually successful or not. So interesting times. David, what you were just saying about, whether there are better or other ways to go about regulating digital assets. Do you want to give us some hot takes on the FIT21 Act?
So I do. And again, these are hot takes. And I'm going to look at my notes here a little bit because there's been a lot to read and digest. And I'll tell you, my positive takeaways are that there were 6 Democrats who voted with the Republicans on approving it. And I think that's really notable because clearly they're going against their party who, amongst, with the SEC chairman, and the president of the White House who've really been sort of hostile to crypto over the past year. So I think that's really notable. What's also notable is these are younger members in Congress. And I think we are seeing a little bit of a generation divide with younger members of Congress being more open to new technology, maybe, versus, the more senior members in Congress who have been a little less welcoming to the technology. So I think that was really interesting. But there were a couple of little nuggets in here that do concern me. And I think it's great that we're getting bipartisan support. But one of the things that does concern me is that it looks like the CFTC and the SEC would share jurisdiction over digital assets, but it would only, the default would be the SEC, and it would only pivot to the CFTC if the project was sufficiently decentralized. So it does concern me that the SEC could still be the gatekeeper, and depending on what kind of rulemaking they would do as part of this bill, could make it very difficult for a token project to pass through the SEC and get to the CFTC. So that's something that sort of I want to see more details about that. I think also I'm just looking at my notes here. The other thing I would say is, will it, if this is approved, what would a safe harbor look like? And would that put a pause on some of the enforcement cases that are being brought, or would a whole bunch of enforcement cases be brought right before this gets approved? So I think this is overwhelmingly positive, but I do think there's some details that I'm certainly going to pay attention to.
David, Josh, yeah, I've got to chime in, as you know, Josh. It's when I look at what we've seen there, David, and I haven't read through the entirety of the proposed draft legislation of Fit 21. But first of all, a year ago, would the three of us have imagined a conversation about draft legislation with bipartisan support moving through Congress? So as a layman, to me, that's progress, arguably. But I agree with you, David. I think the devil is in the details. And you both know the bugaboo that I have is that phrase sufficiently decentralized, because in the absence of anything that anyone can propose that helps to define that is not workable in my mind. That they become a gatekeeper for an amorphous, nebulous thing that they get to define, and I'm worried about the downward implications of that. Josh, go ahead, David. I'm sorry, David.
The last thing so it would require digital asset exchanges to register with the SEC or the CFTC. And I can tell you, having worked in the space, and Coinbase has raised that in their complaints in the litigation they have with the SEC. There's so many rules that don't work for crypto exchanges right now. Like, who is going to do this rulemaking, and who's going to draft rules that we would like to think are, sort of down the middle here? And that's something that also concerns me, because, again, the SEC was saying, Coinbase just come and register, but registers what? And I guess the main thing I would say to you is, when you look at a token versus a security, there's so many disclosures that a security requires to be listed on an exchange. There's just no sort of framework for that in the token world right now. And so that's sort of an issue that needs to be addressed at some point. And I guess who's going to hold the pen on that is another point. Ideally, it would be sort of the community and the regulators together, but those are some of the things I'm kind of like looking at as steps ahead in this process.
And this really, Josh, if I could, one of the things that we focus on that's very important, we haven't done it in several months, but this is that education component in Washington as well. We're not lobbyists. We don't employ lobbyists. But those details that the three of us are talking about are the things that we really need to elaborate on for regulators, for legislators, for other industry participants. Josh, can I tear up the script for a second?
Of course.
I find it so hard when we set up our prep emails around the topics we'll discuss, because there's so many different topics. And I haven't confirmed it, but I just saw a blurb that Ripple's general counsel just resigned.
Whoa.
Oh.
And I could be misquoting that. David, if you've got a monitor available quickly and you wanted to check that, I know you've got the trading turret all around you and stuff. But, and that really the market automatically looks at stuff like that and says, well, that means they've got problems. They've got a potentially problems ahead with the case. I don't know that that's necessarily true, but I would argue that that might be pretty big news if it's true.
Yeah, I think I'm going to try and look while we talk. But look, go ahead, Josh. Go ahead.
I was just going to say, if it is true, certainly it would be big news. Although one has to wonder if maybe, given the timing, it might not signal bad news. It could signal just a really good opportunity for the GC to move on and do something else after at least a partial win. So.
Yep. Yeah. And again, I'm not, that may be absolutely incorrect. I did see the blurb that crossed my radar about 45 minutes ago or so. So for anyone in the audience, if you want to double check, let us know. And Josh, if For anyone who's watching, thank you for joining us. If you've got questions or comments, please put them in the chat. Josh and David and I will address them as quickly as we can.
Yeah, and if you've seen a blurb and you can put it in the chat, that would be terrific.
If you've got a Ripple blurb, ripple it on over to us.
Yeah, I'm not seeing if it's the general counsel. Looks like another attorney calls it quits. It could be somebody who's like part of the defense team, but I didn't see that the GC did. But again, news is in our space is fast and furious, so it could be somewhere else. But,
yes. So
and if I got that wrong,
all caveats apply.
If I got that wrong, I apologize to both of you and the audience.
And we don't have any insider knowledge about the plans
for
deployment of the Ripple GC. So speaking of potential drama across well-known entities, there's been some drama bubbling in the media about FTX. You guys want to weigh in about that?
I want the movie rights. I will do what we need to do to get the movie rights to this story. So, Josh, I think we're talking about allegedly Sam Bankman-Fried had leaked information or the diaries of Caroline Ellison to the news. And I think in response to what DOJ is calling potentially intimidation of witnesses, they might ask for him to be jailed prior to trial, if I read that correctly.
I mean, yeah, I think that's one thing. I think another thing is I've been very intrigued by the fact that the charge against SBF for breaking election finance laws was dropped. And I know it was in part in the news articles I've read about the Bahamian regulators, I guess either asking them to drop the charge or something to that effect. But I don't know, guys. I think it's a very interesting thing concerning about the amount of resources that were donated to different politicians across the board. It just seems a little interesting to me that this charge was dropped. And I just wonder what behind the scenes may have led to that beyond the Bahamian regulators weighing in a little bit here. I don't know if either of you have thoughts about that, but I think the discovery for that would have been very interesting.
Yeah, I have nothing. I haven't chased that down much, David, other than I'm going to go back to my old statement that the movie is going to be amazing.
Yeah, I agree with both of you. And I think, but yeah, in respect of why that was dropped, no idea. But I just will say, although I have ideas, but none that are fit for publication, I suppose. But I do have to say, just a personal view and probably an unpopular view, and I don't know if it's. I won't go into the possible reasons why I feel this way, but with respect to some of the materials that have been leaked about Caroline Ellison, I actually think they actually, in some ways, make her seem more, I don't know. I don't want to say positive,
sympathetic,
but yeah, like even some of the commentary that came out in connection with those journals, like about where she was getting something like 6 million and the other guys were getting like hundreds of millions. Yeah. The information about her breakup and not wanting to upset the rest. I'm not saying, that anyone is, I don't know these people, honestly. So, but I would just say that to the extent that someone may be, maliciously sharing her journal, I think maybe it could make her a more sympathetic witness later on. But I don't know what your thoughts are, guys.
I mean, at the end of the day, from an attorney's perspective, is this witness tampering? Is that what they're kind of alleging in the commentary about what and again, I don't want to make this the drama of FTX and SBF, right? There's a lot of news and there's a lot of stuff happening in this space, but if half of what's reported is to be believed, he was using, I guess, one of the encrypted communications devices, reaching out to people on his team, which DOJ, I suspect, took as witness tampering, potentially. I just get the sense that a personality like that doesn't easily let go of controlling the narrative and controlling the bubble that was around him. And in his mind, I'm not a psychologist, but we've seen many examples of this. In his mind, if he could control that bubble a bit, he could set things straight. And I don't know that justice necessarily works that way.
It's interesting. Look, I think if you're fighting for your freedom, you just have to wonder what steps are different parties willing to take. I sort of look at it through that lens. And I think we all know that litigation can be tough and determined, and everybody wants to have their story told. And really, when you're in court, it's really, it's a narrative that you're giving in court, and you're telling a story, the other side's telling a story, and whose story is more believable. And so I think this is part of their narrative on the story that they want to tell. And, I think we'll see how it all plays out.
That said, David, and I don't disagree with you from the perspective of how the industry evolves. To me, all of this kind of clouds over the still critical conversations around, and I'm going to shamelessly plug it, Josh, right? When we talk about the WSBA crypto industry principles, the main issues are, how do you manage customer funds? What are your disclosures? How do you manage solvency? Not to oversimplify, don't commit fraud. Don't do some of the things that are alleged in the original complaint. To me, that's the core of what's critically important in that case.
And the other thing I would say is, it's very important to reiterate, these failures are failures of intermediaries. The technology works, it's evolving, it's getting better. Wish the UI would get better, but we've talked about that at end. But it is not the technology. The intermediaries have failed. The intermediaries have failed in other businesses. Look, in 2008, some of our biggest intermediaries failed. Unfortunately, the last 18 months, the crypto intermediaries have gone through this cycle.
And we've seen that in other industries. I mean, we could argue, David, that intermediaries failed across multiple steps in regional bank failures over the past year.
Yeah.
So I think, and I agree with you, and I think the underlying technology still working drives the headlines we're seeing now, which is major banks, major brokerage firms want to leverage blockchain technology. So again, to me, in the midst of all of the mayhem and chaos that people see, there's that kind of incremental evolutionary progress.
And I think, look, the BlackRock ETF filing really signifies that, corporate America on the banking side, or institutional banking in America wants access to these funds. And so it's clearly that is the tipping point shift. Like, we've wanted this product in the marketplace, but that is the real shift that, we're not going backwards. Yeah. But what it looks like going forwards is still up for debate. And I think we all collectively have a role to play in that. But I don't think we're going backwards anymore. And I think some of these, what you see on the legislative front, on the judiciary front, is really setting the frame for what doing business with crypto and blockchain in America will look like.
Agreed.
There's a great comment by Sophie Nappert. Thank you for it. It says, there are a lot of emotions in the FTX story. It seems to me that emotion needs to be harnessed in crypto before it can make progress.
I think that is a very fair point. And, to an extent, even pre-FTX, the emotion of what was happening in crypto, in my mind, drove some of the hype cycle, drove some of the repeated claims of we're in a crypto winter, drove some of the we don't need crypto, says Chair Gensler. At some point, the U.S. dollar is already digital. So I think Sophie hits on a really important point.
Well, go ahead, Josh.
Go ahead, David. No, I was just going to bring up a different topic, but certainly,
here's what I would say. I think the emotion is there. I think people are really passionate about what they're building and wanting to take to market. And some of the benefits of blockchain technology and what you can do with it now. Look, even the remittances, if you get the remittances right and you get it, sort of regulated without sort of the U.S. gatekeeping, there's an ability to send value in real time very inexpensively. I mean, that's very powerful. And look, overseas in Asia, they have WeChat Pay and other, apps across Europe and Asia. But here, you can't do that. I mean, you have Venmo, but it's different. I think once people can really send crypto and be able to cash out of it seamlessly here, will make a big difference.
So X.com is going to accomplish all of that.
I was just going to bring that up.
Let's talk about Elon. Let's get Elon as a guest. How's that?
Sounds good. So what's going on with the artist formerly known as Twitter?
So I'll dive into that a little bit. If you look at Elon Musk's alleged publicly noted grand plan, I would imagine he wants Twitter/X.com to be the application for everything. And there's precedent for this. When we look at how people address this in the United States, there's very much this, no, social media is here, payments are there, let's keep these worlds separate. But when you look overseas, when you look to China and WeChat, when you look to India, when you look to some parts of Africa, how you interact in a social environment, how you engage social media encompasses the entirety of your life. It's how you communicate with friends. It's how you pay people. It's how you send money. It's how you invest. It's how you bank. And I think Musk's vision isn't necessarily, quote unquote, a crazy one. It's a very hard vision in the United States, just given the many layers of regulation that we have. But I kind of agree. And I'm generally a Musk fan, you both know. But that's $1 trillion idea if you do it right.
Yeah, look, I think I'm in favor of it. I think if you're going to participate in social media and you're going to be part of these platforms, why shouldn't you be able to tip somebody if you really like something they said, or if you found their content valuable and want to, maybe cite them in a conversation you're having or in a meeting you're having with a client and you want to do that. All these things we should be able to do. I think we should find a way to have more of like a de minimis standard where, certain amounts, under certain amounts are just, we have it in some ways, but like there should just be a way to do these things. It shouldn't be this complicated. And, I do think our AML laws and rules are important, but at a smaller level, like at some point, there has to be some more flexibility. So I would like to see, Elon succeed with this. Who knows what form it will take, but I do think, look, Josh, if you're a prolific Twitterer or Xer now, if you make a post, you write a post and somebody really likes what you have to say, like, why can't they give you, I don't know, 10 Doge, or why can't they give you 10 Ripple, or why can't they give you 10 something else?
David is not recommending Doge for anyone watching this broadcast. It's just a commentary.
It's a commentary, but why not? Why shouldn't they be able to?
It's a fair question.
Can I add one thing to that, though?
Sure.
And I agree with you entirely, David. I think the underlying shift that we're seeing, for a long time, social media was free for all of us because we were the product, right? Like, they sold us, they sold our data, they sold the analytics associated with us, and on the order of trillions and trillions of data points, and made giant companies with that. And I understand that. This kind of shift is the shift away from us being monetized and for us being able to monetize our time and effort, leveraging something like blockchain and crypto and other platforms. I know that's kind of pie in the sky conversation, but I think that's the ultimate goal, that we participate in the sharing of information and data and are compensated for doing it.
Yeah. And look, I think that's valuable. Ultimately, we're the ones who are in the aggregate putting this together, contributing to it. And these platforms, in some ways, the functionality aside, are only as good as the people and the content they share on the platforms.
Yeah. Which is a lot for me to say, considering I've never been on Facebook, nor will I be.
Look, I think people are smart enough to know if you're on these things, what you're sharing is going to be shared with other people. And, as long as you know that and you're thoughtful about it, it's your choice.
Yeah. What you guys are describing really is like the ethos of Web3, right?
Right.
The internet. So it's all, but I am curious. So David, when you're talking about people being able to tip in de minimis amounts, I realize this might be a stretch to hop onto this topic, but the SEC statement for accounting professionals, does this shed any light on what would happen, or is this just more gray?
So this is more gray. And again, this is like my gut reaction to reading it, and I really want to think about it more. But it strikes me a little bit about the statement that the SEC made towards crypto lawyers being very innovative in their defenses and really pushing boundaries on how they defend their clients. like this had a little bit of that feel to it. And I'll read you a few of the things that I picked up from it. One of the things that they talked about was that accounting firms should not characterize their work as an audit or a financial statement audit, as this could mislead investors into believing that the crypto asset is subject to the same level of regulation as a traditional security. So what do you call it then? I mean, if you are using, a methodology to look at a token project or an entity that owns crypto, like what should you call it? And then they go on to say, and here I might agree more, like accounting firms should disclose the limitations of their assurance work and the risks associated with investing in crypto assets. I don't know that accounting firms should take a position on what the risks are, other to say it's a volatile instrument or whatever. And then accounting firms shouldn't make any representations about the future performance of a crypto asset. I'm not sure I've really seen that much, but those are a couple of things. And I'll read you a couple of the other risks associated that that the commission put in this note. They said the lack of standardized accounting principles for crypto assets make it difficult to provide accurate or reliable insurance reports. The rapidly evolving nature of the crypto market makes it difficult to keep up with the latest developments and ensure the assurance reports are still accurate. And the lack of transparency in the crypto market makes it difficult to verify the accuracy of information provided by crypto asset issuers. Of the three, I'd probably take umbrage with the last one because, the blockchain is inherently open. And, if you want to see flows in certain token projects, you can. But I feel like they're kind of walking down this path of perhaps making it harder for accounting firms to do audits and things of that nature. And I guess, if you're a business that deals with crypto and holds it in whether on your balance sheet or something else, like what happens when you have that, meeting with your auditors? What's the take after this bulletin?
Yeah, or even if you're trying to raise money, right?
Yeah.
Ron, what do you think?
So I've got a couple of thoughts on this, and I want to be circumspect in my commentary for now. As you both know, the Wall Street Blockchain Alliance are global partners with AICPA and CPA.com, and they've got teams diving into this as well. But I kind of, I'll reflect back, David, what you mentioned about the original commentary from the SEC to the legal profession. This is meant to chill. This is a political statement in many ways to me, and I hate to say it in that context, but this is meant to chill accounting engagement in this space in many ways. The idea that they're required to understand some of the things that you mentioned around valuation, the idea that it's not transparent, that is belied by existing capabilities that a lot of accounting firms use right now in this space. We have dozens of accounting firms that are members, and all of them are the utmost professional organizations using the most sophisticated tools that they can to service customers that are legitimate customers trying to grow in this space. So this is another example of trying to cast a pall over the industry and leveraging SEC commentary and feedback to industry professional verticals to do it. I'm interested to see what AICPA comes up with. What we might speak to it directly as well, but it really goes fundamentally against what we're seeing a lot of accounting firms do, which is trying to do this right.
Yeah, and in a rigorous manner. And I definitely want to think about this more and read up more about it. But that's my initial take from reading and Mike's sort of initial reaction to it.
Weekend reading, David?
Yes. Who knew when we were, practicing that the summer weekends would actually be, if we weren't doing a deal, would actually be so frenetic as it is now.
Yeah. Reading draft legislation and accounting commentary.
And, and opinions from, different cases in the court system.
And if you have some time, there's the USGAO report, right? I mean, some of the headlines from that sound like it's a positive for folks looking for congressional action. Do you guys want to talk about that in our last few minutes?
I'll kick it off if you're both comfortable. I mean, I haven't read the entirety of the GAO statement. I did read the highlights, and they did a really good job on the website of breaking down highlights and the more in-depth stuff if anyone's interested. It really does strike me as that GAO commentary really aligns with much of what we in the industry have been talking about. They call out the regulatory gaps and the legislative gaps that, candidly, particular regulators have said don't exist. that there are no gaps. So there really is, to me, this bifurcation in the administration and in DC saying, look, yeah, parts of the industry are right. There's lack of clarity. There are gaps. They need to be filled. Congress do the job and show them how to fill it and show them how to grow this space. But again, I'll dive into that over the weekend over a beverage of choice. But David or Josh, did you see the same thing?
What do you think, Josh? We've
monopolized the time.
Yeah. I mean, there was a lot to take in. And so, yeah, I mean, I really do think, to me, the biggest takeaway was exactly what's been said, which is the fact that the main takeaways were that there are regulatory gaps with respect to exchanges, right, trading platforms, and stable coins. I think this is timely. And I think if I were a trading platform, I would look at this and point to it and say, look, even the government itself acknowledges that there are gaps, just as Chairman Gensler did, when talking about the secondary market a while ago. Yeah. What about you, David?
Well, I mean, I think to people who are practicing in the industry, whether as lawyers, accountants, or financial professionals, we've all seen the gaps. We've all wondered, how do we address something? How do we describe something? How do we account for something? So I think we all know, people in this space, that there are these gaps, and collectively we want to, find a good way to fix those gaps. But I do want to reflect, going back to the legislation, and I gave a little bit of short thrift to the bipartisan support, and I do want to say that I think everybody in the community should be, really happy with the efforts that they've made to help get some of the Democrats on board for some of these bills. Even though they're sort of a work in progress, we really have made progress there, and I'm glad it's becoming a little bit more bipartisan and not just sort of Republican-led bills.
Yeah, I mean, one thing I would just say briefly about that is, I think this is directly as the result of industry feedback, is if you look at the migration from the discussion draft to the version that was introduced, right, there were a number of changes. Now, some have identified that, okay, maybe with respect to some of the language of the bill, that maybe, having a Lemus Gillibrand style carve out might be helpful, right? Where people say, oh, look, this could inadvertently be grabbing aspects of DeFi, because how are you, whether it's inadvertent or intentional, let me just say that. But there are other parts where there were meaningful changes. So for example, originally there was a prohibition on marketing of even a blockchain, right? And of contributing to open source code. And so I think the language changes that resulted and that were reflected in the version that actually went forward, I know they reflect industry commentary, and I think they made for a much better bill. So Ron, what about you?
So just a couple of things to add to that, David and Josh. So we've been talking about legislation and policy a lot. We're going to announce soon, Josh, you're aware of this. You and I had this conversation the other evening. We'll be launching a series of policy updates on a regular basis with a couple of WSBA members who are deep in understanding policy in Washington and understanding the roadmap for that. So stay tuned. For everyone in the audience, we'll be publishing that publicly. I was interested in the news this morning. I'll probably dive into that a bit more this weekend as well. If I read correctly this morning, the proposed bipartisan stablecoin legislation in the House Financial Services Committee, if I saw it properly, fell apart. And it fell apart due to potentially to pressure from the White House. And again, it's this kind of bifurcated, the administration not a fan of any of this, despite the original early intentions in 2021 with the whole of government approach. And we're seeing it really impact proposed draft legislation. So I'm going to dive into seeing where that goes over the coming few days. We'll have our policy experts speak to that, Josh, publicly. And if I could tear up the script a little bit, Josh, we didn't talk about price market action this week. And David, I haven't had an opportunity to chat with you about this, but BTC has been below 30,000 for the better part of the week. And I wanted your thoughts about how tied is this to Fed moves, quarter point interest rate increases, and I'm wondering what's the support level?
So, okay, sure. So I was actually going to tell you that Bitcoin right now is at an all-time low for volatility. So that's something very interesting. We've been in this tight 29 to 31,000 range for quite a while, which is also interesting. It's very dynamic, Ron. Like on one hand, we've had a lot of positive news. We have this potential ETF hanging out there. We have potentially some regulatory clarity going forward. But I still think the tipping point is until institutions can feel comfortable, and I don't mean the ones that have crypto funds, but broadly speaking, institutions feel comfortable that they can hold different tokens, especially here in the US. I don't know what the next big push will be momentum-wise. And so I guess the question would be, yes, I think institutions can feel comfortable at holding Bitcoin, but I don't know if I'm sitting at one of the big banks and I want to buy positions, and I won't name them, but we'll say 5 of the top 10 tokens by market value right now. What's their view? Can they do it? Can they not? Are they securities? Are they not? I mean, we have our views, but it feels like to me right now, until some of that clarity comes, it feels like we're in a range for a while until there's one big positive news, something positive in the community or a negative event that will drive sort of breaking out of this wedge.
Yeah. Josh, can we shout out to LinkedIn user who posted? I haven't had an opportunity to look at ARBS, a real blockchain solution, but that interestingly goes back to the comment we made earlier, which is not about, in this instance, not about tokenizing assets, but generating revenue from data sharing as well. That's the upending of that kind of social media model. So I'll dig into that. It'll be interesting to see where that goes as well.
Yeah, look, I think
commented. Go ahead.
One thing I noticed too is that with Twitter, that if you become a verified user and pay the $7 a month, it looks like if they run ads on your username and people scroll through them and click on them, that you get some sort of monetary benefit from that. So I think that whole concept is developing. And I guess the question is the $7 fee more than you potentially will earn as a content provider? But I guess that goes towards how big your following is and what you're saying.
It's X now, David, not Twitter.
It's X.
And for anyone in the audience who knows Elon, we want to interview him. Someone please drop us a note.
And so, guys, what are you looking forward to next week?
David, you go first.
Wow. So right now, I think people are really going to digest these bills next week. It feels like that's going to go on. I don't necessarily, I think it's going to be more of a surprise, I think, than anything else. I don't think there's anything right now that we're sitting here on Friday that I'm thinking will have some conclusion next week. I know that the Bank of Japan kind of changed their view on the yen and the bond rate in Japan. And so I'm kind of want to read into more about that and get a little smarter about that. But I think a lot of people are going to digest what's been going on in the legislature. And I think you're going to see a lot of people comment about this accounting bulletin that I referred to this morning. I expect to see a lot of thoughts about it in this upcoming week. What about you, Ron?
Me, in addition to all of that fun legislative stuff that I'm going to read over the weekend, we are making preparations for episode 4 of Understanding the WSBA Crypto Industry Principles. Shout out to our friends Gavin Fury and Nick Curley over at Winstead. We're going to be deep diving on custody and segregation of customer assets. That will probably be Thursday afternoon next week, 1 p.m. Eastern. Don't quote me. Schedules are tough. But we'll be preparing to dive deeper into that. You were both participants in the principles. So we really continue to move forward, understanding the principles for the wider industry. For anyone in the audience who hasn't seen the principles, you can go to our webpage, WSBA.co. There's a big old link to the entirety of the principles as well. That's enough for a weekend. I'm hoping for a little quiet time next week, but I keep saying that every week, Josh.
Yeah, one thing I'll say about the crypto industry principles, I know for a fact that people in other jurisdictions are using it as a reference, including when beginning to think about recommendations that they might provide to governments. So it's definitely useful. I am curious though, Ron, for people who may have missed the first 3 episodes or the 4th episode, are those sessions available somewhere online?
Absolutely. So all sessions for WSBA recordings that are publicly available, including these, our crypto roundups, including our understanding the WSBA crypto industry principles, are always available on the WSBA YouTube channel. I don't have the link handy. I'm sorry, Josh, I should have. But that being said, if you go to our website, you'll see the link to the YouTube channel. If you go do a search at YouTube on Wall Street Blockchain Alliance, it brings you right to our video page. Lots of great stuff there. And you see David and Josh a lot, people. So you get an opportunity to rehear their thought leadership as well.
Yeah. Oh, and the one other thing I'll say is that, and one of our viewers mentioned Canada, and Canada did come out with a framework this past week. And again, I haven't had my AI bot read it for me, but all kidding aside, like I would like to digest what's going on in Canada. And Canada's been, more conservative than the US has been when it comes to crypto. So I'm curious to see what their conclusions are.
Sophie, thanks for that commentary. If there's anyone you want to connect us to, info@wsba.co. We should probably pull, shout out to our colleague Greg Murphy and some of our friends up in Toronto and up in Canada. We should probably pull them in to have this international conversation. It's important to know all of it.
All right, guys. Well, do you have anything that you want to say before we end for today?
I've said enough.
No, I'm curious to see what happens next week. At the end of the month is Monday, so I'm happy to see, if we see any price action over the weekend and what the monthly close is. So I think to your comment, Ron, it would be helpful for the bulls of the world to see a close above 30,000 for the month. But let's see what happens.
Last thing, I'm sorry, but if I read correctly, the number of whale wallets, which is 1 Bitcoin or more, David, correct me or put me in my place if I'm wrong, is over 1 million wallets now, which are allegedly to be long-term holders. Is that correct?
I believe so, Ron. I believe that's right.
Long-term bullish.
Yep.
All right. Well, we will leave it there. Thank you, everyone, for joining us. More information, WSBA.co. We'll be on YouTube. We'll be back next week. I'm going to dress less formally and get more comfortable. We'll be in August by then. Thank you all for coming.
Thanks, everybody.
Bye-bye.
Thank you. Bye.